We just started this listen again because I realized the camera was not properly aligned in terms of the whiteboard. So I'm just going to start this all over again. So we're basically talking about the use of a motor vehicle. So the use of a motor vehicle is a dim supply as such. So the determined value would always have to be an amount which is exclusive of the VAT value amount. So we'll have to make use of the fraction of 100 over 115 so as to take out the actual VAT portion, because the car dealership would have likely levied output VAT. So the value that we use for our calculation in helping us to get to the initial amount of the dim supply VAT output would be an exclusive of a VAT value amount so far as the value of the motor vehicle is concerned. So if, however, you are actually given a motor vehicle that is rather not bought from a car dealership, but it is rather a motor vehicle that was previously used by one of the employees within the same company, in that instance, the motor vehicle will basically be determined on a basis of applying the 15% diminishing value amount basically being due for you to basically base your calculation on. What do I mean? Take a situation where we have a motor vehicle that was maybe valued at being 400,000 rands. So that motor vehicle being valued at 400,000 rands, and the actual employee used that vehicle for a full year, that would basically mean that 60,000 rands of that 400 rand cost would have to be an exclusive value that would take into our account. Therefore, 340,000 rands would flow into our account in terms of the determined value to actually help us to get to the output VAT on the actual dim supply. I hope you follow that logical reasoning. But in this instance now, we've got a brand new car, so we must just basically use the fraction as elaborated. So the input, if the input tax was denied, for instance, for the motor vehicle initially when we bought it, that would mean that the percentage that becomes applicable in our calculation would be 0.03%. So we'd basically apply that percentage to the determined value that we have in helping us get to the initial output VAT that we're trying to get through to. If input VAT, however, was not denied, but rather it was granted, that would mean that we likely did not have a motor vehicle, but we likely had something like a bus or something like a truck that would have likely not been a motor vehicle, but maybe a delivery van, for instance. Then in that situation, we don't apply the 0.03%, but we apply the 0.06%, because it was not a motor car, but it was rather what we've just mentioned. Therefore, we then take the amount of months that we had the use of the actual motor vehicle for, we bring that into our calculation, and if it was for 3 months, we'll take the actual months and we'll basically apply that to our calculation. Then we'll also bring into our calculation the tax fraction that would likely be applied to the amount that we'd have at this particular stage. And once we get that, we would basically have to recognize output VAT in terms of the dim supply output VAT that we have to recognize. And that's where we are. However, we do get situations where an employee bears the full maintenance costs. So the employee is responsible for maintenance of having to maintain the car. The full responsibility of maintenance rests with the employee. If that is the case, there's 85 rand deduction that the employee puts into his calculation. Only if he's responsible for maintenance. So even if the employee was to pay 1,000 rands from, they say employee is responsible for the full maintenance cost, and he pays 1,000 rands likely on for maintenance costs. If he's responsible for the maintenance costs, that basically means that you will always bring into account the 85 rand into his deduction. He will not be allowed to deduct whatever amount of maintenance that you would have actually paid for the maintenance. It does not work in terms of the maintenance portion. That 1,000 rands amount is basically given just to confuse you. And you will never have a situation where the employee pays maintenance, a portion of it, and the actual company also pays a portion of the maintenance. It will never happen in that way. It's either the company is responsible or the employee is responsible. So just be careful of that fine line, right? Therefore, if he's responsible for anything other than maintenance, let's say he's responsible for fuel, he cannot recognize that as a cost that he can deduct, because fuel in its nature is a zero-rated supply, which we failed to mention, but it's now arrived in our knowledge that it happens to be a zero-rated supply. So in that instance, it's not deductible. However, if the 1,000 rands was perhaps maybe for repairs, but not maintenance, but repairs, then it becomes deductible. The 1,000 rands would be brought into our calculation, and it would come in as a deduction instead of the 85 rand. I hope the logic makes sense. So if the actual costs and the contribution was also maybe towards acquisition of the motor car in terms of the fixed cost, then, and the employee was maybe contributing 1,000 rands on a monthly basis for that, it would not be a deduction in terms of that calculation, because that relates to an amount which is acquisition of a motor car, which is a denied supply. So in that instance, the employee would not be granted any deduction so far as the actual calculation is concerned in getting through to the initial output VAT that will recognize so far as the deemed supplied. Another instance that arises in that instance is that SARS is also thinking about the additional receipt that the employer is getting. If, say, that we take the instance where the employee is qualified for the deduction of the 1,000 rands repairs that he